We're very excited here in the studios for this next conversation because Ramesh Damani is here. You know, Ramesh, when we decided to speak about this conversation, between then and now, several things have happened.
Too many.
Too many. So we'll try and put them in order of urgency or at least recency bias. Let me start with this Anthropic/Palantir scare. Is this the nth time you've seen the Indian IT companies being written off, or does it feel different this time?
It feels different this time, though. And I've been a big bull and a big beneficiary of the big software boom that has engulfed India for the last 30 years or so. But here's someone sent me a tweet yesterday, which I'll share with you. This is the top Indian 7 software companies are worth about $350 billion. Anthropic is worth $350 billion in itself. Anthropic has 2,000 employees. We have 16 lakh employees. That is the scale of productivity change that is happening in this business. So while I think the business will continue, I think the multiple of these businesses have already been derated and will continue to probably be derated. So I think the world for the last 30, 40 years, ever since I've been in the market, the apex of value in India has always been brands, software, licensing, patent, intellectual property. I think that's about to change. I think the next 10, 20 years will be led by a different set of leaders than what we saw in the post-1992 era.
Now, so I'm going to dig a little deeper on that, because what has been loved about these companies also is that they are cash rich, they give dividends, and they are conservative in their approach. I'm talking about the big ones. You think that something which was seen as a positive now becomes a negative, that they are not moving fast enough or they're being too careful?
I mean, that's been the rap, that these guys are using their cash piles to pay out dividends as opposed to investing in new technology like AI learning models or product development. I think maybe the ship has sailed for these companies in terms of riskability. There are a few innovative companies that are doing that, but by and large, the massive Indian companies are focused on good old services business, which brings good, stable profit margins. I think it is under threat. I think it also reminds us that nothing is permanent in this world. You know, the business models change and keep evolving.
Ramesh, I wonder if you've thought about the implications if things go the way some people are suggesting, to say that the workforce that you spoke about, the 16 lakh employees, if that needs to be curtailed at some point, the knock-on effects of the destruction of demand here in India in various pockets, maybe even real estate to a certain extent, because I was in Coimbatore just the other day. They say 60–70% of people buying real estate there are IT professionals. Does that have a huge knock-on effect?
See, it's very difficult for me to prognose into the future of how this will go, because it's a bit above my pay scale, to be honest with you. But there's a lot of movement in global capability centers in India, which will take the role of software, so there will be employment there. And there'll be displacement. I don't think there'll be the easy entry-level software jobs that people got graduating from IIT or a technical institute will probably be gone. But they're different jobs. For example, if you were in the 80s, you never heard of someone, you were a bank teller, you never heard of an ATM expert or a YouTube influencer. Oh. All these new jobs keep getting created. So while there is some pessimism regarding the software jobs in India, I think overall the employment will continue to be fine. I would not be too worried about that at this point.
We were speaking with the founder of Fractal AI. They're heading to IPO, and he was talking about the fact that Indian IT companies are capable of pivoting. They have the cash piles necessary, but the street will have to forgive a period of low profitability. Do you think that the street is that forgiving?
I don't think so. I think both problems are there. First, the IT people need to bet the balance sheet on something new and risky, and the market needs to be able to hold them for a period of time at an elevated valuation. I think both are challenging.
Mr. Damani, if indeed that ship has sailed, and if I take the cue back to your opening answer, which is that the companies that led the markets for the last 5, 10, 15, 20 years, we'll see a change in that. You look into the future very well, and that is at your pay scale, lest you be modest about it. What do you think brings about this change, the regime change as you spoke about?
I'll tell you this, Neeraj. Thank you so much for having me first. Let me make a point that when I was a student in the 80s, there was a US ambassador to India called John Kenneth Galbraith. He was a professor and economist, Harvard trained. And I do remember him writing it sometime in the 1970s or 80s, that the finance minister of every country should have his residence in Washington and not necessarily in state capital. Because what happens in Washington is so much more important to the economies in terms of interest rate flows, in terms of capital flows, in terms of trends, ideas. Everything takes place in Washington. Amazingly enough, 50 years later, that's still true. The decision of the Fed governor, decision on tariffs, the decision on who's a friend and who's a foe within NATO, is all being influenced by Washington. So even 50 years later, we find that huge influence on Washington. Having said that, cut from the 80s to the 90s, and as I've said that I feel the apex of value creation in India has been brands, intellectual property, financial instruments. Like, what will replace it for the next 10 or 20 years? And there's a song when I was a student, which, you know, you're probably too young to remember, but by Madonna. She used to sing, I'm a material girl in a material world. And I have a feeling that a lot of the materials, particularly the critical minerals that are getting so much attention, will continue to constitute the value, the apex of the value creation over the next 10, 20 years. Because a modern economy cannot function without critical minerals, without strategic alloys. For example, software, if you listen to the Anthropic CEO, for example, he believes it could be free or for pennies now. It's just become, you know, you have a machine that automated the code. Yeah. But you cannot control what you produce from the earth. You know, it's so important. It used to be that, oh, we want these critical minerals, we'll get it from Africa, process it in China, and cheap and almost regular supply chain. I think that world has changed. I think two trends that I see is that every country or every regional bloc wants its own defense. So you have NATO, you have Europe, you have Asia, you have everyone trying to make their own defense industry. So that'll be an industry that'll continue to attract attention and talent over the next few years. But in order to have a vibrant defense industries, you need access to critical metals, whether it could be as basic as aluminum or permanent magnets. So I think people who control those stockpiles, people who have the ability to process them, will probably get a higher and higher rating because of the strategic value of that price.
Wow. In effect, sir, you're saying that what we've seen in the last 12 months, that's the trailer. The actual movie, the 3.5-hour Durandar, is still in front of us.
I mean, it's hard for me to say that because I've always been a big software, intellectual property, financial instrument type of guy. But increasingly, I realize that software is becoming commoditized business. Hard to say that it's become a commoditized business. And what the market will value is control of strategic resources, ability to process them. And I think defense also continue to do well.
Wow. What has been your assessment of the deal, the trade deal? We're waiting for the details, of course, but you saw a day of complete relief. I would call it a relief rally more than euphoria in the markets, maybe because, okay, finally, at least, you know, that ice has been broken. Do you think that there are long-term benefits to certain sectors, segments as we open up and this actually flows through, or are you skeptical right now?
See, I'm skeptical only in the sense that you're dealing with a president who's pretty mercurial in Washington. So, for example, tomorrow he invades Iran and he wants Indian support. India refused to do it because it's a regional ally of India. You know, you could say, okay, because they're not my friends, I'm putting the tariffs again. What the Indian government has done, I think, is a good deal. What they did was they tried to strengthen their hands by doing deals with so many other players. So Washington ultimately had to come to the table. It's a good deal, and America remains the big daddy of the world. You know, we need to be, you know, pay obeisance to America, if you will. So I think India played its hand well. They didn't take any taunts that were coming from America in terms of, you know, financing the Russian war or whatever. We maintained a relationship with Russia, maintained a relationship with EU, and now got a deal signed at a very competitive tariff. So it's a good development. I just hope it lasts. Given Trump's ability to change or pivot on a dime, I'm not very hopeful that, given that what could happen next in Iran or Venezuela, that India would support him. There was a time when, you know, India has a lot of experience, of course, if you remember the non-aligned policy, so to speak. Yeah. But I think we'll now be forced to choose a little bit, at least, to be in the American camp, which perhaps we want to be also, but sometimes it's in our political or geopolitical interests to be non-aligned. So let's see.
Yeah. From an investment perspective, you know, for many people watching right now and wondering where the play is it time to look again at companies which will benefit from more exports? Is it time to look at some of those factors or sectors which have gotten a boost on Atmanirbharta? Because we're doing two things at the same time. We want to increase our areas or markets for export. So we're signing all of these deals. And then we want to become self-sufficient as well. Are these two big themes playing out that you are looking at closely?
I think so. I think textiles, for example, in data centers are two new themes that benefit from all these, the way the world is shaping up in the future. Because I think in terms of data centers, I think the government has given some extraordinary tax breaks in effort to move the data centers here. It makes sense to me that it will move out here, provided we speed up the process. You know, the process of starting a data center might take 2 years. We need to do that in 6 months or 8 months or so. How do you play that to construction, to fiber optics, through you know, various other means of betting on data centers? Because they would be done and controlled by US corporations, perhaps. So you need to benefit from the suppliers to those people, if you will. The other thing is, what did you mention?
Atmanirbharta, self-sustaining.
I think that's probably a dominant theme that is going to run through the world economies now, that everyone wants to be self-reliant. You can no longer rely on US protection, on the rules-based order. And the whole theory that, you know, oh, things are, you know, cheaper in Africa, so we'll buy them just in time from Africa or buying just in time from China. I think that world has changed. No one will now rely on the US umbrella or the Chinese umbrella anymore. You want to, if you want to be a middle power, at least you need to have your own sources of supply. So whether it's, and particularly in defense and metals, I think those two areas where it will be expressed itself most forcefully.
I do want to ask about that, defense and metal, and specifically on metal first. We've seen so many dislocations over the last 1 year itself in terms of prices and the way that they've moved, the base metals themselves. And you know, you some people have spoken about demand destruction at certain prices. You see that crash come through. And then other people have spoken about the paradox of the price going up to a point where consumption goes up in a big way, right? So how do you think that that settles, in your opinion? Have you thought about how long it'll take for this to pan out? And I take the point on the fact that people have to control their supplies, but till that happens, do you continue to see these dislocations?
I mean, for example, the people I talk to, for example, you know, germanium is one rare earth, you know, which China controls 90% of the supply. Now, these guys have a 6-month stockpile. You know, what are they going to do after 6 months? They're desperate to search for sources, buy whoever is giving you a block. So there are companies that now, you know, figure that out and are, I think the critical earths corridor, for example, or the listed companies that actually are already in the mining space for rare earths. I think market will tend to re-rate these stocks over a period of time. There will be a transition phase, as you said. I mean, I don't think it's going to be switch on and everything's fine. I think there'll be a transition phase. But the market will, you know, value those companies who have the access or control, perhaps. And the latest proposal that's come from the US, for example, is to say that they put a floor on the price of critical minerals, which means that a boost of profitability to all the companies that are already existing in that business. So I think the trend that Tamanna talked about, this self-reliance and protectionism, I think will be fairly dominant themes.
In that context, if we speak about defense, ultimately, from our perspective in creating and manufacturing in India, there needs to be knowledge sharing and technological sharing. So from that perspective, a deal with the EU, a deal with the US is steps in the right direction. But do you think that there's going to be willingness to share in that realm where you've had so much protectionism on the one hand, and you now have these deals? You can buy aircraft from EU, you can buy a Rafale, you can probably buy an F-35, but will they be willing to share? And will that be the big challenge for Indian defense companies?
I think they want to make it themselves. I think India will make it themselves, EU will make it themselves, America will make it itself. I think the idea that the US provides that nuclear umbrella, it was a great bargain for US, and despite what President Trump has said, the US provided the protectionism, and as a result of that, it became the first among equals in almost everything out there. Plus, the dollar was used as a... All that is going to change. I think, as Mark Twain or someone said, what does he know of America? Only America knows. And my point has always been that Trump doesn't understand America's role in the world as a policeman, moral guarantor. I mean, 1960s, President Kennedy went to Berlin and said, Ich bin ein Berliner, I'm a Berliner. Talk about the globalized Americans out there. Reagan, you know, they were all in the mold of, you know, America's role, projecting America's role in the world. And statesmen out there, and realizing that part of the deal was that we keep our markets open. You sell to India, you sell to America, there's no problem with it. Textiles, electronics, plastics, whatever you want, you sell that. we are economy big enough to take it. And the benefits that they had, I mean, imagine because of immigration, 7 out of the top 10 S&P companies are run by immigrants today, You're giving all that up for a manufacturing base that will never come back to America. That whole generation of Americans have lost the ability to produce an iPhone or produce machine tools or produce things like that. It's never going to happen. So it's a whimsical of one man. Unfortunately, that is now, the pendulum is now swung the other way. So the trust that we used to have in America as a free country with legal rights is probably permanently destroyed, at least permanently destroyed for the next 10, 20 years, even if Trump is no longer president.
Wow. And therefore, have you wrapped your head around the investing implications of a potential dollar decline? Or is it, as Warren and Charlie sometimes do, too difficult to analyze? Chodo kyun karna hai?
I'll take the short answer. It is too difficult to analyze. I don't know that. I mean, I have plenty of software stocks in my portfolio, so I'm also scratching my head what to do with,
No, but at a global level, Mr. Damani, I mean, just the dollar decline, does it have implications for flows, etc., and stuff like that?
I mean, see, Trump wants a poorer dollar. He doesn't want a strong dollar. The official policy is we want a strong dollar, but Trump doesn't really care because all dollar has been declining. I think it'll keep declining. I think the thing that I think Trump will, understand, and Scott Bessent is pretty sharp and Ken Walsh pretty sharp, is that at some point if the debt gets beyond reasonable, the bond vigilantes will be out. I'll give you an example of what happened in UK.
Yeah.
When Liz Truss tried to explode the budget deficit without known source of revenue, the bond vigilantes came out and knocked her out. She was out of prime minister, the shortest duration prime minister. In America, it doesn't follow a parliamentary system, it follows a presidential system. But the only check that I see coming to all these policies is in November 26, when the US goes for midterm election. This is my fond hope. If you remember, Neeraj, in the 1980s, Mrs. Gandhi imposed an emergency in this country. And then she removed the emergency and voluntarily called for an election. But she was wiped out from the northern states in the 1980s, Uttar Pradesh, Bihar, Orissa. And she never regained, the Congress never regained power almost a generation after that place out there. Why did she lose power? Because of very unpopular family planning programs that took place in the 90s. She lost a whole generation of electorate because of that. Potentially in the 2026 election, it could be heading to that. I think Americans are fed up with ICE, with masks running around the streets. It's not America. I lived in America for a number of years. That's not America. It's a free, open country where people respect different cultures, different value systems. So because of a small base of yours that elected you power, you are actually changing the entire fabric of this country. So I think there'll be a price to pay, and I think November 26 is the red letter day. If he manages to win the election or do better than expected, I think then we're in for a really rocky time in the world. But at 26, if he loses, I think there'll be a newly emboldened Congress who will challenge him. And again, there'll be some limits on executive authority.
So, sorry, does that potentially reverse a lot of the trends that we've just discussed over the last 15, 20 minutes? Because everything seems to hinge around one personality.
See, I doubt that, because once the pendulum swings, it swings. For example, in Trump term 1, he had imposed tariffs on China. Now, Biden could have removed them if tariffs were so bad, according to him. But he kept them. He didn't change the initial tariffs that were done on China. So I think, unfortunately, the pendulum swing, the world changes. You can't cross the same river twice. And the trust that America enjoyed in the world as, the great open country, the beacon of freedom, the supporter of NATO, has forever been changed. So it changes at the margins, I'm sure, but it doesn't go back to the way you and I knew America.
I know that obviously you're known as an equity guy, but I have to ask about whether you have an opinion on the way that gold has performed in the recent past.
I used to think that be in equities, avoid gold and silver completely. And the long-term CAGR for gold is, 3% over 100 years or something like that. And Warren Buffett put it best for this. He said that if in 1980 or 1989 you had bought 1 ounce of gold, even today you would have 1 ounce of gold. Nothing changes. But if you bought 1,000 shares of Infosys in 1993 when it went public, you have probably 1 lakh shares of Infosys today, and all the dividends that you enjoy. So gold and silver are good for traders who can move on price speculation. They're not probably good for basic retail investors. But the caveat to that is that I think the world is now moving perhaps to a commodity-led cycle. So I think my sense is gold and silver are probably headed higher, even from the record levels that we saw. That's my sense, though I don't participate in it personally. My wife does, but I don't.
Well, yeah, sometimes she can come back and tell you that I've been a better investor than you, Ramesh. What are you saying?
I'll tell you, Neeraj, in the stock market, my old friend, Mr. Jhunjhunwala, is no longer with us, had this very famous saying. Whenever we felt very bullish on the market or extraordinary turn in the market, he would always tell to a group of friends of his that, बीवी का बांगड़ बेच के शेयर ले लो. मतलब sell the family jewelry and buy shares. He was that bullish out there. But in the last 6 months, if you sold your BV's Bangad, you probably lost a lot of money. So
maybe the BV has
so all our BVs are saying, "Hey, we were the smart ones. You're the stupid ones."
No, but now, since we're having fun, I'm gonna go completely micro, right? The last 12 months or 18 months, I've seen you invest in some very interesting things, including businesses which are movie linked, right? So are you doing this because you genuinely believe the return of Bollywood, return of entertainment, or is it that the sector was so forgotten and the valuations might have been so compelling in whatever investments that you made that you found it compelling? What is it?
I think there was a one-off. I just happened to...
Achha,
there's no overarching theme. The overarching theme is what I suggested to you, ladies and gentlemen, today, is that defense and self-sufficiency. You know, something we grew up in the 80s thinking self-sufficiency was just crap. It's come back into, almost, center play right now. And I think I can just see it with the politicians talk that no one wants to be dependent anymore.
Okay, this is going to sound like a very broad question. What is your mood right now as an investor? Because we constantly hear this, I'm very bullish about the markets, very bullish and optimistic about India. Is that getting tempered right now with overshadowed by what's happening in the world?
You know, at least what my experience has taught me, Taman, over the last 30, 40 years is that India is a great place to invest your money. I mean, as I never get tired of telling people that when I came in the late 80s, the index was below 1,000. Today it's closer over 80,000, the Sensex, okay? So you made 80 times your money just by being invested in the index out there. So I think you remain invested, particularly when I go and visit companies and go and visit promoters or travel this country. I come back with a great sense of optimism. I mean, this is not just for standard TV fare. I believe that the promoters are doing extraordinary work in India. And they deserve to be betted upon and deserve to be held onto the shares. So I will, for whatever purpose, I'm not fully invested, but I'm 90% plus invested. I keep looking for good ideas to invest in. I keep finding good ideas to invest in. I think because of the demographic dividend that India is enjoying at this moment, there's huge upsurge into the middle class that we hope to happen by 2045 or 2050. I think that creates tremendous opportunities in various sectors, including banking, including, defense, whatever. So I would remain invested in India. Do I get rattled from time to time? I think at the budget we were together and we were all rattled, but that's the way life is. It's never a linear, never a smooth process up there. But I think people who invest today at today's valuations, in 3 years will be better off than they were, say, by not investing.
Yeah. Okay, that's really the last word. Ramesh, this has been a fantastic conversation. We've all enjoyed it, enjoyed having you here. So many quotable quotes, and yes, we all know Material Girl.